Hey, how's it going? Welcome to mentfx. So the more you trade, the more you randomly trade, the more random your results are going to be. Of course, the better you get at identifying context and the better you get at identifying times where you should trade, the better you get. So what we had today, and I'm just going to bring this up because it's happening in the group right now, and you can join up the group with the stuff below. Otherwise, you can use these free videos to get very, very good. We have one of our funded members who, is again taking a look at something. And in this case, it's Pfizer. So it's just a stock. PFE, and he basically took a look at it and said, hey, I'd love to hear your thoughts. I kind of like how this looks. I want to catch a move on this. And instantly, one of the first things that I do when someone brings up an idea or brings up a stock or an idea, right, is to take a look at the overall screener, right? Because the screener basically tells us if something is worth even taking a look at. So as I do that, right, one of the first things I saw, funny enough, was that across the board, we're looking at an extremely, extremely red market, right? When I see this, I'm actually going to go ahead and send that to him. There we go. Right, when I see this, the first thing I think is, I know that when I open this chart, regardless of what he sees here, he's trying to bottom fish a market, right? And the problem with bottom fishing a market is that usually you're going to end up wrong. So I actually sent him an image just now, and actually looking at UJ, at something that we personally traded with the team, right? If you guys remember, even on this YouTube channel, we started watching UJ with the team privately as well as here publicly around these points here and these points here for a continuation long. Actually, initially from these points right here. And what you'll notice is I drew a few arrows. These arrows kind of signify the same areas that he's looking to trade the current price action of the thing that he sent. So I actually went ahead and analyzed it, right? I actually went back to the specific thing that he's looking at and analyzed it. And the first thing I did was I started on the daily because on average, my current system, so I actually teach all members, and I'll teach you guys too, all members use the EVC setup, which is the entry, validation, context. This is kind of an overlapping way to view any time frames in the market. And very simply, if you're someone that enters on, let's say, a 60-minute chart, so I personally enter on a 60-minute chart, that's an entry time frame. And you can do this for anything, including seconds charts, 1-minute charts, but I'm just showing you how to do it for what I do. So if I enter on the E, which is the 60-minute, all I do is I multiply this by about 6. Okay, if I multiply this by about 6, I get to around 5 hours, which for me is basically a day. So I just use a daily. Okay, and then what you do is you simply multiply this number by 10 and you get your context, and that's about 10 days, which is equivalent to about a week. So these are kind of the 3 main timeframes I use in my analysis before I decide if something's worth looking at. And the way I think about it is because within these timeframes, you have a few that you can actually take a look at, right? Because of course, timeframes are a way to view orders. They're not just a simple roadmap to telling you exactly if you're ready for a trade, right? The timeframes just help you view orders across a few closely related timeframes, which is why the EVC rule is simply to multiply by 6, then multiply by 10, and you have a generally very powerful timeframe model. So what I did for this member is, this is the underlying thing that I look at. The first thing I did is I opened up the actual screener, and the screener showed a very, very telling story, right? The story was that, hey, this thing is likely in distribution and likely wants to continue that distribution. But I went to go take a look for him because one of the things he's doing is he's looking at, hey, this thing is looking like it might shape up, it might be accumulating, it might start to move up, it's making some bullish breaks. So the first thing to do is actually figure out where you are in that market, right? And the way that we do that, and again, this is all taught across this channel in multiple ways, but I'm gonna focus on making some better content for a lot of you guys that have followed me for a while and are now and actually just want to learn how to actually use the tools in this market so you can then go ahead and start making money, because that's the main goal. Some of the main tools that I use to identify where I am is simply stage 1 and 2s across a few timeframes, see where you are. So are you in a expansion phase or are you in a contraction phase, and are you doing that to the top side or the bottom side, right? You then want to use the EMAs to judge where you are within those stages. Are you on the bullish side? Are you on the bearish side? Is there a possibility for bullish side, for the bearish side? And this is, again, across all time frames. The cycle, which is actually taught in the private mentorship, and I might make a video on my public YouTube, but it's just a longer, more in-depth thing that I'm not going to cover right now, but just kind of the cycle of where you are in the stages. So all the cycle does, because I don't want to hide anything in front of you guys, but I also want to make it available over time because, well, there's a lot of info to it. Right? The cycle is simply how are the stage 1s and 2s delivering, and where are we in the cycle of them delivering? Does it make sense for them to keep delivering, right? So stage 1, 2, EMAs, cycle, and actually I'll write out more if there are more, but these are generally the staples of what I use to determine, let me go like this. This is the staples of what I use to determine if there is something that is worth trading, right? So the first thing I start with, like I showed you guys, is actually taking a look at the actual screener, right? By looking at the screener, where's my screener? There it is. By looking at the screener and looking at the exact pair that he asked me to look at, I initially already know that this is likely going to be bearish, but maybe there's something that he sees that I don't yet, or maybe there's something he's spotting. So the first thing I do is I actually go and take a look at it after, right? Because again, the price action is there to confirm what the screener might tell you, because the screener is only a tool to aid you in deciding what should be tradable, okay? So as I go to this and we have our general EVC model, the first thing I do is I look at the daily and I see this, right? This is a very simple, you know, as I kind of looked at this, my brain and instincts instantly went to bearishness. The reason for that is the same things you see over and over again. The current stage 1s and 2s, whether they're larger or smaller, so the current stage 1s and the 2s, stage 1s if they're bigger into 2s, stage 1s and the 2s, stage 1s and the 2s, stage 1 and the 2s, stage 1 into 2s, stage 1 into potential 2. Every single one in repetition in consecutive order continues to showcase that, hey, for the most part, this price wants to go lower. Okay, and as a result, you know, the first thing I see is, okay, this thing has been bearish and is likely to retain its bearishness because that's how markets move. That's how trends work. Nonetheless, I went to a weekly because the weekly is a good starting point to tell us if a stage 1 or 2 could be forming for a given direction. And here again, the same story is told. In this case, the smaller stage 1s and 2s, stage 1s and 2s, stage 1s and 2s, stage 1s and 2s tell a very telling story. That the MAs or the EMAs on the downside want to be held, that price wants to continue delivering on the low side, that stage 1s and 2s are continuing to deliver on the low side, and most importantly, with the most recent price action, price is actually just stage 1 and started potential moves lower and is actually surfing or sailing these lower moving averages lower. So the first thing that I see before I even do anything on my context time frame, in this case, which is a weekly, using the exact same kind of thing that I just described to you guys, the first thing I see is that this price wants to go lower, 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 and lower, right? Which is why I kind of drew this out and saw that. Now, as I go to a daily, it should confirm the tellings of the context, right? If something is disconnected across multiple timeframes, I instantly look away from it. But if something starts to agree, then that's actually a potential idea that's worth executing upon. That's how trading works, right? You look across a few things, you look across a few rules. As the rules start to agree, you look for the trade. If things disagree or they are unsynchronized, we don't take anything. That's why traders make money. And most people in the space cannot do that. They can't go through a process of determining if it's worth to keep looking. So as a result, they take all trades and any trades, and those become random trades, and they get random results, and they wonder why they stay stuck forever. That's why, right? Now, nonetheless, as we take a look at this, what we saw is price make a bullish break and start making a bullish move. And you can see as a result of the kind of bullish moves it's made, it actually put itself into a reaccumulation in the short run on the daily chart. Now, that's not too important because, again, when we take a zoomed out view of what's really going on, and this is because the brokers that we access the data from come from multiple brokers, okay? So that's why sometimes they won't line up exactly because this is using just some very simple language. This is using more in-depth language for the screener. But nonetheless, okay, this is saying at the moment on this daily chart that it could be a reaccumulation, which is one of the reasons that this member might have spotted and started to watch this market right here. But everything has already, from an EVC perspective, started to prove potential bearishness. And most importantly, right, when the entire market, so in this case, NASDAQ, whatever you want to call it, right, NASDAQ, has been proving to be extremely bullish and has been moving bullish, the same market has been proving to be very bearish and very stagnant under the 200 EMA, kind of moving lower, stage 1 and 2ing lower, structurally moving lower, and most importantly and most recently through the cycles or the stages, right, it has chopped and played within basically lower moving averages. So what that means is that overall distribution is happening. Everything's being supplied, right? The composite operator, the big institutions are constantly selling into this thing. And at the moment, there is no willingness on behalf of large institutional buyers to be in this, which means that as retail or as small fish or as people that look to follow trends, we shouldn't even be considering something like this, which is why one of the main things you'll see from me is, overall, this thing is bearish. It's falling. It has no relative strength. It's moving lower when the market is overall getting weaker. This thing just moves even lower. So I said it's honestly a really good short. And then I kept going to my actual entry time frame, which in this case would be a 65-minute. And as I head over to the 65 or the 60-minute, it really doesn't matter, right? Same thing. I have my own little reasons for using the 65. It just makes it easier for the stock market, but don't worry about that too much because it's not important for this video. And as we get over here and we start to view this structurally in terms of just institutionally, how are we moving structurally, the story is becoming very prominent for a bearish move. So all of a sudden, my focus becomes on the supply validation to the downside and nothing to the upside, right? No part of me looks at this and thinks, yeah, we can start to move like this. Everything to me, as I look at this, says, if anything, this is going to become a very, very valuable short. Either it moves higher first and then becomes a very valuable short here. And then this just moves lower to the $26, $25, $26 area. It just keeps going down, or it doesn't, right? And in reference to this exact thing kind of being shared and this setup kind of being shared, and the fact that the screener is very simply telling a very telling story, I offered him an example so you guys can read through some of the stuff I said here. Maybe you can take some value out of it because this is part of the private, but you guys can see it here publicly. What I did is I offered him some value by showing him what has happened on UJ. This is a pair that, of course, we have also followed. And I highlighted some points that were very similar. So again, this is the example of trying to knife catch a market that has not proven itself yet. So if you notice where we are here, this member was trying to potentially go long in a market that's right here. That's the equivalent to trying longing a market that's over here, that's over here, that's over here, that's over here, maybe even any of these inside areas as well. So as we go to UJ, I kind of showed him the same thing because I wanted him to understand that if the market is going to make a move and is going to make a prominent move, that he's going to become a part of it. Instead of sitting there trying to catch the bottom tier fish, you know, the low knife catches, the low knife catches, the low knife catches, where all these areas kind of mean the same thing. If you allow the accumulation to come in, the accumulation to start proving itself, the stage 1s and the stage 2s to start delivering, and moving higher and higher and higher, then all of these bubbles that I've drawn are areas within which where I might scale down and look for entries, you'd have opportunity, and not only opportunity, but opportunity that then runs and makes beautiful runs for a long time. And lo and behold, with my team, I followed since here to this entire move. We stopped following around these breaks here and we waited. We started following again around these areas here as price moved back into accumulation. And since here, we've been following this thing long through this high and onwards. And as a result, we've still been getting long through this entire time. And while that's happened, I want you to compare the thing that this member was about to trade long versus the thing that I've been trading long with the team over and over and over again, to compare the underlying, let's say, story or screener context model reading of this market. And all of a sudden you start realizing that trying to bottom pick, fish pick, bottom like knife catch, all these crazy little moves down here is not important for a system, right? You're not going to get anywhere trying to bottom pick these markets. And even if you get them right, it's not going to be worth it. Instead, it's going to be worth it to allow the accumulation to come in, to let the money come in, prove itself, so then you can start to trade that thing higher with whatever EVC time frame you're using, right? So you can be entering a 60-minute, you could be entering a 1 minute, you could be entering a 30-second, it doesn't matter, but you need to understand how contexts deliver and how markets set up. And as a result, I kind of sent him this and I said, hey, the thing that you're doing right now is equivalent to trying to pinpoint and enter one of these longs here. And theoretically, one of them would work, right? This one ended up working. But the likelihood is that even if that one ended up working out for you, how much of that move would you take? And how much moves would you have taken losses on if you had tried to trade the lower time frame of all these areas here? That is where that initial issue of, hey, I'm always taking trades and I'm always just taking losses and losses and losses and I'm always wrong comes from. Because what you're doing is you're trading improper context, expecting proper contextual deliveries. So imagine that you expect a proper contextual delivery, but you trade improper context. Those two things coincide, right? Or they're not synchronized. And when they're not synchronized, the system breaks. And as a result, you end up being confused about why the market won't do what you want it to do. But the reality is, if you start with something simpler, like either that higher time frame lower thing, or as someone that's in the private, look at the actual thing, the tool that's telling you firsthand, hey, this thing is across the board bearish, then the first thing that can happen in your mind is not, what are the ways within which that I might be able to long this? The things in your mind that instantly go off should be, you know, what is the story being told here? And the story is very simply that this thing wants to be a shorting-based market. The reality is if this market was something that I ever traded, it would have to move significantly higher, make accumulation, and then around these points here is where you'd want to actually start to stalk it, because at those points, if the trend is going to start, it would make a wild, wild move. And if you compare that to some of the stuff that I've been watching and that I have been trading, you should see the same thing, right? The moves that I'm taking were here, not down here, not in the bearish move, and above all DMAs, right? The moves that I've been taking are not down in the bearish dumps where price was moving lower and I was trying to pinpoint a high. No, it was after price had started to prove itself and I took the longs. The moves that I've taken on this, through these highs, through in here, etc., over and over and over again, hasn't been through the moves down here. It's been through the proof of the market in the higher areas. The moves that I've taken on Bitcoin, so this is a stock of Bitcoin, but it's the same thing, weren't down here, weren't through all of this. They were simply through the proof, and then of course I missed some of these because I just wasn't watching it at the time, was through the proof and the continuations from there. Now new moves are not coming from here, they're coming through the potential proof to start watching them go higher. At the moment, you can even see that the expectation is actually that price just keeps going down because right now, there's nothing for me to trade. And you can just compare that to like Bitcoin USD charts, same exact thing, right? There's no reason for me to trade something that has been proving not to, at the moment, deliver the way it should. And then this is where a lot of people get stuck. So use this, get a little bit better, understand that context holds everything together, have synchronization between your system, between your timeframes, so your system does not break, and you will make money. All right, cool. Thank you, guys.